Good morning, everyone. I'm glad you could make it to our training this morning. Thank you for joining us. This is the D23 Fund Advanced Training. My name is Liz Schultz. I'm the SFMS Senior Operations Analyst. From our SFMS team today, Jennifer will be monitoring the chat to make sure we address any questions you may have during the training. We also have Carlene Hancock with us today. Carlene is responsible for processing D23 fund requests and will also be presenting today. Hi, Carlene. Before we get started, all registered participants should have received a PDF copy of these slides in your email inbox yesterday afternoon. If you did not receive this email and you'd like a copy of the slides, if you could go ahead and type your email address in the chat window, we can make sure to email you a copy. Jennifer, if you see any email addresses populate in there, if you could make sure to send them a copy of these slides. This presentation, perfect, thank you, Jennifer. And this presentation will be posted on the SFMS website as well. So you'll have this, we have other training materials out there as well, so you can refer to them later. All right. So I see we still have some people joining us. Feel free to enter questions in the chat as we go. I'm going to move forward to our next slide. The goal of today's training. So this D23 Fund Advanced Training is meant to provide SFMA users that request or approve D23 funds a more in-depth training to cover some advanced D23 topics. As a prerequisite for this training, you should have also attended or viewed the D23 Fund Basic Training that we held a little earlier this year. And I'd like to do a quick poll of our audience. If you could just type yes or no in the chat. Did you attend the D23 Fund Basic Training? So I'll give you a moment to enter your responses. Great, I'm seeing a lot of yeses. I think I might have seen one no in there. Okay, it looks like most have done that basic training. If you have not, we are going to be skipping over a lot of foundational concepts today. We're going to be talking about some more advanced topics, assuming you kind of have that basic knowledge. I would encourage you to go out and look at our training. We have a copy of the slides on our website. There's a link on this slide to get to that information. We have the YouTube recording. We have the handout. There's a lot of good information in there. So I would definitely encourage you to take a look at that. But we're going to be skipping over some of those topics in this training. If you have questions on it, if Carlene or I are skipping over something and you need a refresher, just put a question in the chat and we can try to answer those for you. Right. So today's agenda. We have quite a few items on our list today. We're going to go over the legislation that needs to be submitted for new D23 funds and Treasury account requests. We will talk a little bit about the process for establishing D23 funds related to a debt issuance. We will cover D23 funds that use suspense accounts. We'll discuss the D73 cash fund and linking cash. We will go over some more information on how GAAP funds and GASB 54 indicators roll up in SFMA for financial reporting, and the process to make changes to these fields on an existing D23 fund. We'll talk about some of the key SFMA system jobs that refer to information on the D23 fund profile. And then finally, we'll end with discussing how to close Treasury funds, D73 cash funds, and D23 funds in SFMA. Now, we have blocked out 3 hours for today's training to make sure there's sufficient time for you to ask questions and cover these topics. Now, these topics are the ones we felt were the most important to cover in advanced D23 fund training. But if you had other topics you were hoping we would cover today, feel free to enter that information in the chat. We should have time at the end so we can address some of those things. There's a lot of topics and questions that may come up, but I think these topics are going to be relevant for you. So we're going to have 5 to 10 minute breaks as well. Because it's a 3-hour training, we'll try to take a 5 to 10 minute break at 10 a.m. and at 11 a.m. to give you some time to get coffee or answer emails or do anything that you need to do. And there's several slides throughout this presentation to pause for questions between each topic. But feel free to type in those questions at any time. Sometimes you might have a question on a specific slide, so we can cover those as we go. So at this point, now that I've covered the agenda, kind of give you the basics of what you can expect this morning, I would like to turn it over to Carleen Hancock, who will start us off by talking about legislation.
Thanks, Liz. Oh, I need to turn on my camera. Thanks, Liz. As you know, the legislation is the foundation for every single D23 that is processed through SFMS and requested by the agency. So I really wanted to touch on a couple of things. How the bills come about and what I'm seeing when I'm getting D23 requests from the agency. One of the things I am seeing, and one of the things I want you to understand, is what an engrossed bill is versus an enrolled bill. So basically, the documentation for an engrossed bill is legislation that has passed only one chamber of the legislature, whether it be the House or the Senate. Only one has it was introduced in that body, has gone to committee, has been voted on, and has become engrossed. It is then sent over to the next body for voting and for adjusting. It could go into another committee, but by and large, it's not settled legislation. It is subject to changes and variations. I have seen engrossed bills all the way up to F, so it's been through the House at least 5 times, has gone through different iterations. It's still considered a document in process, so it isn't settled legislation, so it's therefore not appropriate to request a D23 using an engrossed bill. And these will be rejected by SFMS until they become enrolled. Now, what an enrolled bill is, it has passed both houses, so it's both the Senate and the House have voted on it, and it has passed forward. Still not complete because the legislation needs signage by the Senate President, the House Speaker, as well as the Governor. It is then, once all 3 signatures are attained, it will become legal legislation. It will then be assigned chapter law or an ORS number. And this is, the enrolled bill is the primary source of all legislation that is needed for a D23 request. Now, there is a tab in the Oregon Legislature website for all of the bills that are presented and are in process or have been voted on. For each one of those, for each session, and it is by the House or the Senate, whoever originates the legislation. At the bottom of the bill is, you will see a history tab, and it'll give you the momentum and where it is in the process. And I look at this a lot, and so should you. This is the best way to monitor bills that you see coming through and that you are waiting to request D23s from because you've been notified by a source within your agency that this is coming forth. You need to be aware and prepared. This tab will show you when the president has signed and what date. In the example I've given you, this bill was signed by the president, the Senate president, on 4/10, was signed by the speaker on 4/10 as well. Then the governor signed it on 4/13. You see where it has become chapter law and where in the chapter law it's going to be located, which is to 2023 in this case. And then also it will give an effective date of when this legislation is good and valid and ready to be used. We also will receive D23s through the e-board process. The e-board minutes will need to be given to us once they meet. The meetings occur most often in the middle or to the end of a biennium. So they don't always meet until it's needed. Generally speaking, it's to grant agencies additional spending or funding. It can also address agencies' receipt of grant monies and allow them spending authority to give them to allow them to spend those grant authorities. And it is not a source of new legislation or programs. So that's something that the e-board doesn't do, but it is responsible for moving funds around. Sometimes an agency will find that they don't need as much money, so they'll move monies within the meeting. And those e-board minutes are most often will cover multiple agencies. So when you're presenting e-board minutes, remember always that I will need specific sections of the e-board minutes to address that D23. Okay, effective start dates for the legislation and for a D23. It's a lot of times effective dates are written into the legislation. Where you can find it is generally in the last section of the bill, right above where the signatures are placed on the bill. It could be one of a couple of things. One is the effective immediately upon the governor's signature or when the governor signs. It can give you a specific date. I've saw this quite a lot a couple of legislative sessions ago where they were giving us new agencies or new programs that were to start mid-year or in a different fiscal year. So it was in 2021, but it wasn't going to start until January 1st of 2023. Or a new agency is coming up, or they're breaking them out and giving us a new agency. A lot of those dates are going to be specific dates as far as when these new agencies become active. If there is no information provided at all in the legislation, the effective start date is generally speaking 90 days after the legislature ends or legislative end. And this is called Sindai. And this is most common during a regular legislative session when it has ended. So it's, okay. We're going to talk quickly about Treasury subaccounts. And Treasury and subaccounts have been written into legislation. It's very old language. We're not seeing it as much, but we did have a couple of instances of this. Excuse me while I have a drink of water. Subaccounts are in the legislation. They literally say Treasury subaccount. It's very old language, and the Treasury can choose to allow or not to allow the subaccounts. This is not something that SFMS is a monitor or regulates. So we don't allow or don't allow. This is strictly Treasury that allows or don't allow. And currently, Treasury's thoughts on subaccounts is they do not allow them. But if you do see subaccount language in your signed legislation, we do have a workaround that has been agreed upon with Treasury. And what you need to submit for the legal legislation for submittal of the Treasury account is the legislation with the subaccount language. So the House bill or the Senate bill with that language, as well as ORS 291.001. Now, 291.001, we refer to that a lot, and I'm not sure how many of you are really aware of what ORS 291.001 is, but it's a very, very general ORS that basically allows D23s to be created or Treasury accounts to be created with Treasury's approval when there is no other legislation in place. It's basically allowing you to use a D23 for accounting purposes only. It doesn't give you funding. It doesn't give you the right to spend money out of it, but it certainly gives you the ability to kind of change up your accounting if you find it absolutely necessary and there's not something in the legal legislation that is addressing this specifically. So that's what 291.001. So that's why a lot of times when you put 291.001 on your D23 request, why I will send it back and say, this is too general. It doesn't allow you to spend the money. But if it is with an accounting change and you have no other way to do it, then ORS 291.001 is your best friend. But please, before you use it, please reach out to either Liz or myself to make sure that it is appropriate and that you won't run into any issues when you do use it. And then additional information is we want you to work with the Oregon Treasury to make sure that any references to Treasury account in the legislation is properly worded in the legislative concept document so you can avoid these subaccount issues. The legislative concept phase is the time to make all language changes to the documents and this will make it so it doesn't impede the agency's ability to execute these bills and the desires by the legislature and frankly by the agencies themselves. So it is not SFMS's role to review the verbiage and or the legislative concepts regarding Treasury funds. I know in the past we have been requested to do so. It really isn't our place to do that. It is really within the agency itself. And SFMS's role does begin after the House bill or Senate bill has been fully executed through the process, through the legislative process. So are there any questions? Do you need any further explanation about what SFMS is looking for in the legal legislation for the bills to either give you a new Treasury account and or to just begin the review process of a new D23? Nope. Okay. I'm going to move on. Bond issuances, as many of you are aware, we have just gone through a couple of months of a lot of bonds and a lot of D23s being requested for those bonds. We had a lottery bond and I believe 2 XI bond issuances in the last month and a half. So April and May were very, very busy for most of the agencies. There were a lot of you, I believe, received bond monies. So basically, I want to reiterate who is authorized to request bond issuance treasury accounts, those new treasury accounts that DAS CFO will be requesting, and they do it with every single new bond issuance. Even if it's an old program, you will receive a new treasury account. DAS CFO, of course, is allowed to do the XIQ bonds with 286A.820 and 291.001. There you go. That very general ORS. And they are allowed to request new treasury accounts for those bond issuances, as well as lottery bonds. The other 3 agencies that I am aware of that have legal legislation or a separate ORS unique to the agencies to allow them to have their own bond issuances is Education, Veterans, and Housing and Community Services. These 3 agencies are allowed to go out and have bond sales on their own. I am unaware of any other agencies that have ORSs that allow them bond sales. So DAF CFO office, bond sales, Education, Veterans, Housing and Community Services. Bond issuances legal legislation is never the same as what DAS CFO office uses to request the Treasury fund. So when you see those email requests from by DAS CFO office that say we're requesting the new Treasury funds using this legislation, that is an agreement between DAS CFO office and Treasury that those are the legislation that they use to start the process of the Treasury funds for the bond sales. What we are looking for is the legal legislation from the agency, grant the agency spending authority, be it House HB, or an e-board minutes with the appropriate section, and if appropriate, a subsection. So it might be House Bill 0001, Section 248, subsection A, if it's specified for a different program, the agencies anyway. Also, the debt issuance will be a separate House bill from what if you receive debt service a Treasury fund. Anyway, the ORS used by DAS CFO office is too general and generally just states that it's for DAS purposes to open these accounts, and it does not address the spending limits, or grant authority to spend the monies received. So where we're looking for this legislation is down at the bottom of the form, and it is basically where it says, please list specific law or other authority. So this is where you would put the HBSB section subsection. I'm still having problems with this. I know we addressed this in the basics, but I'm still seeing it come across my desk where we're having to send it back and ask more questions on this. SARS has a wonderful training on the accounting and reporting for bonds. and this is a link for that. And other resources is XIQ Bond Program Agency's Guide. Also addresses how the agency needs to account for these bonds. SFMS, at least my desk, is not a, I'm great for D23s, but I am not necessarily the best at the accounting side. I always defer, if you have any questions, to either your SARS analyst or your SFMS analyst. Both are great resources, and please use them. They love answering questions. So that really was, so did anybody have any questions regarding the D23 and bond issuances? Okay, I'm either covering it really, really well, or I'm being just a little too general. Okay, let's talk about suspense accounts for a moment. Suspense accounts are accounts where you have treasury accounts that are outside of the Oregon State Treasury for your programs, and or they're within the Oregon State Treasury as a, I don't want to say sub-account, but it is a specialized account. I believe it is a TRS account at Treasury, where you may or may not have writing authority. They are not separate and distinct from the general fund. Oh, and I will, let's, Jennifer, do you want to ask that question that just popped up? Because that really is on the, I'm moving forward, so I'm going to move back.
Yeah, the question is, do we need to provide the revenue source with the bond issuance request? Where do we find the revenue source?
The revenue source is the XIQ bond itself or the Treasury bond. It generally speaking is the legislation will specifically say, if they're good to me and good to you, it literally will address the XIQ bond and how much revenue is coming in for it. I think the last XIQ bond was not quite as clean. So people were using kind of general spending for that program. But yes, if the answer is yes, we do need a revenue source, which is the XIQ bond. It's how much do you expect in. DAS CFO office should be able to help you with that number, how much they're expecting to have in, because after all, they are the ones that are transferring those funds to your agency through that process. And I believe the process has changed slightly, and
Carlene, there has been a slight change to the process. So some of those bond accounting resources you provided will be updated from SARS and the CFO office. And I see Elizabeth had a follow-up question for the revenue source. Do you want to see the total bond amount there or the debt service amount?
I think the total revenue source. I believe that the question is asked on the D23 itself is the revenue source. So yeah, the revenue source.
Yeah, so
what you're going to be spending.
The total amount, yeah, the total amount of the bond. We just need to see what that revenue source is, and then you'll have your separate legislation that says, here's how much expenditure authority you have. So we want to see both of those pieces.
We want it all. We're nosy. You know, I always tell my friends that trust me isn't an audit standard. And so part of all of this is a great explanation of what the money is coming in, what is the authority for spending it, And where did you get that authority? How, you know, so it's who, what, why, where is what you're answering essentially. Okay, was there another question I see pop up?
Just a smiley face, so you answered the
Okay.
question, so you can move forward. Thanks, Carlene.
Okay. Okay, let's talk about expense accounts. The suspense account are the agency needs to work directly with OST to set up a suspense, or what they term a TRS account. These are accounts, as I said before, that are outside of sometimes are outside of the Treasury, Oregon State Treasury, or they are within Treasury and are kind of special accounts. They are not separate and distinct from the general fund. They are not written into legislation. So just be aware of that. Setup requests are outside of SFMS's purview. And as such, SFMS doesn't directly request these for the agencies, unlike those accounts in legislation that are separate and distinct from the general fund and are written in legislation. Now, occasionally there are suspense accounts that have check writing authority and where it is needed. It needs the approval of both Oregon State Treasury and the FBS manager. There is a form for it. I'm not exactly sure what the form number is, as I've never requested one from Treasury. I'm not involved in that. But for cash and budgetary controls, they do not exist with Treasury suspense accounts. And so these must be considered when requesting D23s and requesting those accounts to be set up at Oregon State Treasury. So if you have a suspense account with no check writing authority, what I would expect on a D23 is a local fund indicator of S, which is equal to suspense, which does not allow check writing on this Treasury account. Treasury fund would be equal to 999, or which is classified as Oregon default. And the agent budget would be equal to 0. This is what I would anticipate. If I see anything other than that, I would definitely be contacting the agency to find out further clarification. And then there are suspense accounts that do have check writing authority. You've received permission from Treasury. You've received permission from the SFMS FBS manager to have these accounts. When that is put in place, these are the suspense accounts that will start with an 8, and so that they are locked in with the Treasury account. And the D23s associated with these types of check writing suspense accounts, I would expect a local fund indicator of N. I would expect the Treasury fund, again, to begin with 8, and then consecutive, numbers as assigned by SFMS. And you will be notified of what that number is so that you can include it in your D23 request. And I received that notification and confirmation from OST. And then the agency budget, I would expect to see a 0. So additional resources for suspense account information is you can go to the SFMS desk manual. Under category Treasury, chapter is TREA 0.5. It's called Suspense Account Transactions in R-Stars. And you can find the link to that desk manual is State of Oregon Accounting System SFMS desk manual. Any questions regarding suspense accounts? I don't believe they're super common, but they come up enough times that I believe more information is good information.
Carlene,
Yes.
while we're waiting to see if anybody's got questions on suspense accounts, not all agencies use suspense accounts, but we do have several agencies that do. One thing I wanted to point out, which you mentioned, which I think is an important point, is that there are no cash and budgetary controls for suspense accounts in SFMA. And what we mean by that is deposits to a suspense account aren't going to show up on the 13 screen to be reconciled. It's not tracking that activity like it would with our typical receipted accounts. So it's kind of a separate process. For the budgetary side, suspense accounts use different T codes to record activity, because it's a different cash GL that we're recording suspense account activity to. So that link that Carlene showed with SFMS desk manual has all those T codes. But if you look at those T codes, none of them require appropriations. So if this is budget activity, it's not going to show up when you're recording it to a suspense account. So a lot of agencies, if they have budgeted activity flowing through a suspense account, they have a receipted account and they're using that to reimburse the suspense account. And then they may be, if they're granted check writing authority, they're paying it out of the suspense account. So if you have that situation, if you're thinking about suspense accounts, definitely look at that SFMS desk manual, because there's some additional considerations there because they don't have the same controls in SFMA.
Okay. Move on to D73. D73 form, we slightly hit on basic, but I really want to delve back into it because we get a lot of questions regarding D73 cash accounts. These are cash funds that help regulate if you have trying to link several D23s to a single cash treasury account or cash fund is a great way to track them. Like I said, we talked about that in basic training, so you should have kind of a basic understanding of what a D73 is, cash fund. But let's talk about it. As always, we need who is requesting the agency, your phone number if there's any questions, who's authorizing the D73 cash fund, and the date you're requesting it. It's just general to almost all of our forms. The meat of the form is what essentially is going on the screen itself, which is the agency number that it is being associated with, the fiscal year. This is not an AY profile, this is a fiscal year profile. And the cash fund number. The cash fund number is assigned, but it is a 5-digit number. It is assigned by the agency, so you do have some autonomy on what you want to number it. The title is also designed by the agency. It is not legislatively mandated, such as a treasury fund, separate and distinct from the general fund, is almost always titled within the legislation, and you don't have a whole lot of wiggle room there. On D73 funds, you do. What is the treasury fund? It is associated with the effective start date, and when do you want it to start? Generally speaking, it corresponds when the treasury fund is opened, as well as or when the D23 that is associated with the D73 cash fund is requested. That I would link those somehow. An effective end date. If you know when this is going to end, you can put an effective end date, but generally speaking, I would say don't, because you never know when these things are going to take longer, and that might be too limiting of a field. I know that when you have contracts or programs or grants, Effective end dates are part of it, and you tie those very closely in, and effective end dates are very important for those profiles. But generally speaking, if it is an SFMS or centrally maintained program, effective end dates are not used unless we are inactivating the profile itself. So you can go ahead and leave that blank. I wanted to pop out the related appropriation number. This is for linking cash only, and so it will be blank and should be blank for most of the requests that come across for D73. So the this is a D73 or a cash fund that is using linking allotment, and it has been approved via the SABRS process. There is a form. There's a form for that, and so work with your with SABRS if you need linking allotment. These are mostly tied to federal funds or federal programs, and so, but this for sure, leave blank unless you know it's going to be a linking allotment. I want to go through the questions because I've been getting some D73s that are not answering these questions. You know, basically it's asking, is this a new cash fund? Well, yeah, it is, because I'm getting a new form for it. So it's a yes. And then please provide at least one D23. If you know it's going to be attached to multiple D23s, please put all that you know or reasonably should know are going to be attached to this cash fund. And these are going to be all new D23 funds. But one is required. Question 2 is asking you, is this a change to the cash fund? It can be yes or no. I have had title changes to a cash fund. And it might be, yes, titles pretty much changes. Is it a change to an existing D23? This is no, as in always no. D23s, once established and used, cannot have, are only allowed the following changes. They are allowed a title change. They are allowed, and then with SARS approval, they are allowed to have a gap fund change, a G54 indicator change, or perhaps a G54 description change. Those are the 4 changes on a D23 that are allowed. So if you're thinking to change a D73 number or make a change on a D23 to suddenly include a new cash fund, this is not allowed.
Carlene, we've got a question.
Okay.
Do we submit the D73 at the same time as the D23? Ask another way, does the D23 need to be approved first?
D73 first. So yes, please, if this is a new D73 account, submit with the new D23 fund at this, you can submit it at the same time. After that, if you have I know there are agencies out there that have a D73 account that is linked to their general fund or the 00401 account. And they have different D23s come up after that. But if this is a brand new D73, then there should be a brand new D23, sorry, fund. So, so yes, it can come in at the same time. I would almost expect it to come in at the same time, actually.
Thank you.
And then that also is going to be on your cash fund for that new D23. This cash fund account is going to be your assigned 5-digit number. The cash fund indicator is going to be 3. It's going to be 3. So it's going to be linked to that D73. You're going to look on the 63 for that cash fund. That's how you're going to monitor your cash, is through this. So anyway, but once a D23 is established, like I said, I really want to make this crystal clear. There can be no other changes other than title, which is a non-accounting. It's literally just a description. G54 indicator, gap fund, and G54 description, and those 3 elements are only if SARS approves it.
An additional question: are the templates on the DAS site?
There is a template on the DAS site. Unfortunately, right now it is not a PDF, a fillable PDF. So I apologize. I'm sorry for that. I believe it's been that way for a number of years. It is on our list of things to correct. We're just not there yet.
Okay.
And then basically, why is the change being made? There again, we're curious. We want to know. Anyway, also at the very bottom, question number 3, if there is a related appropriation number, the default answer is no on this. So the related appropriation number at the top in the body should be blank with the no. If it is yes, the agency must provide the SABRE signed form granting the linked cash permission. So that is D73. That D73 form, which we really didn't go over in the basic training, and I really did want to go over it. Are there any questions on the form? No? Well, I'm going to turn this over to Liz.
All right. Thank you very much, Carlene. Looking at the time, we are currently at 9:48, and we are just about a little bit over halfway through our slides. So I think we are going to have plenty of time. We weren't sure how many questions there might be. So I think this would be a good point for a break before I start talking about linking cash. So let's get back here at 10 a.m. and we will complete the slides. If you have questions or other topics you want us to cover, please enter them in the chat. But so far, it looks like we might be able to wrap up a little bit earlier than planned. All right, I will see you back here at 10. All right, it's 10 a.m. So if you want to start coming back, settling back down to talk more about D23 funds, I hope everyone had a nice break. We're able to get up, maybe get some caffeine, respond to some emails. I know that's what I did. We've got quite a few more slides to go through. We're still on track to be able to wrap up a little bit early for you today, but we have plenty of time. So if there's questions or topics you want to make sure we cover, please just let us know. This training is for you to make you feel comfortable with D23 funds. So let's get back to our slides here. The next topic, the next series of slides is going to focus on linking cash. It's also referred to as linking allotment, same thing that we're talking about here. It's known by a couple different names. For our audience, I'd like to know just maybe another quick poll question, yes or no in the chat. Does your agency use linking cash or linking allotment? I'll give you a moment there to type that in, and maybe you're not sure what linking allotment and linking cash is, and that's okay. We're going to talk through it in the next few slides. All right, I'm seeing some yeses, some not sures. Okay. So I think we probably have a little bit of a range. Not every agency uses linking cash, but I still think it's useful to talk through with this audience, even if it's something that your agency doesn't use, just to give you a better understanding of the system. Maybe in the future, you'll be with an agency that does use it. Maybe your agency will need to use it in the future. So I want to explain a little bit more about it because I don't know that there's a lot of clarity on how it works in SFMA. All right. So what is it when I'm talking about linking cash, linking allotment? So linking cash and linking allotment is more of the exception. It's not the normal process that we follow in SFMA. So this is kind of special functionality that is available. So under normal circumstances, an agency has funds recorded in SFMA before they spend the money. So Carlene went over and talked about the D23 cash fund. You have to have a D23 cash fund to be able to use the linking cash functionality. You can have a D73 cash fund without linking cash. It's most common that you probably would have a D73 that doesn't use linking cash. But if you're going to use linking cash, it has to have a D73 fund. So most of the time when you are monitoring your available cash balance in SFMA, you're tracking it by the cash fund on the 63 screen to see how much money you have available. So most of the time, you're going to have funds available before you start making expenditures in that cash fund because SFMA is going to allow you to spend more money than you have on the 63 screen. However, some functionality was needed in SFMA because federal assistance disbursements for those agencies, a lot of times you need to spend the cash before you receive any inflow coming back in, their reimbursement basis. So how can you make those expenditures that your agency needs to when it's going to be a delay before you get that federal reimbursement? Now, there's a couple different ways to manage that. Linking cash is one option. So what linking cash does is it essentially allows an agency to borrow against an appropriations unexpended allotment balance. So you can spend from a D70 cash fund that doesn't have enough available cash on the 63 screen. So that's what it is. Because I mentioned it is a bit of an exception, it does require approval. So this functionality has to be approved by SABRS and CFO. So the statewide audit and budget reporting group and the DAS chief financial office have to approve your agency to be able to use this functionality in SFMA. Our SFMS group, Carlene, she will not set up a D73 with linking cash unless we have that form of approval from SABRS and CFO. And it will only be approved in limited circumstances. So what we most frequently see linking cash is when federal funds are linked to a general fund appropriation. That's the most common scenario that we see. There may be some other exceptions in there, but like I said, anything that you're requesting for your agency has to be approved by SABRS and CFO. So it's required to use this, that both the federal funds and the general fund are legislatively authorized for the same purpose. So you're going to be able to borrow some of your general fund appropriation to make these expenditures. So the legislation has to cover you using those general funds in that way. Eventually, you're going to be reimbursed for those general fund dollars, but to even be able to borrow those general fund dollars temporarily, you have to have legislation that would allow you to do that. And both are going to have to use the same Treasury Fund 0401. That's the general statewide general fund. The federal funds will be in a separate D73 cash fund from other agency funds within 0401 when you link federal funds to general funds. If there's multiple Treasury funds that are involved for this, SFMA can't support that through the linked functionality. So if you have different accounts and you need to borrow money from different Treasury accounts, you would have to work with Oregon State Treasury to develop a line of credit to allow you to do that. So I do see a question in the chat. If multiple appropriations use the same cash fund, does that mean they are linked? No, that is not what I'm talking about here. You can have multiple appropriations. They may have different D23 funds associated with them. Those D23 funds may all use the same cash fund. That's not the functionality we're talking about here. This is a specific setup on the D73 screen, and I will show some examples of what that looks like so you can verify whether your agency has this situation or not. Right now, as of AY 2023, we have a total of 11 agencies that are approved to use linked cash functionality. So it's not extremely common across the state, but if you have this situation, specifically these federal funds that are reimbursable, it could be something you might want to look into. Again, you're going to have to get that approval from Savers and CFO. So this is what the setup of linked cash would look like on the D73 screen. So this is just a made up agency, an example that we have here, agency 101. This is a bit of an older one. So we've got the agency on our D73 screen. We've got the cash fund number that the agency assigned. This is from fiscal year 14. So it's a little bit of an older example. The title, it looks like in this one, we can see it's related to a federal grant. So it's federal funds that are being linked here. The Treasury Fund is 0401. I mentioned it needs to be 0401 for this linking functionality to be able to work. And then what you'll see if you have linked cash is this related appropriation field will be populated. So in this example, I can see we've got a general fund appropriation that begins with 8, that's general fund. So I can see federal funds are being linked to the general fund appropriation for AY 2015.
Liz, we have a question. Can linking cash be set up on existing D23 funds?
So if you have an existing D23 fund and it has a cash fund on it, and you get approval to add linking to that cash fund, we can add that later. We would need to look at it. Most of the time, anytime you're setting up something new, you're going to need all new structure. But if it's the same cash fund and you already have things set up and you're just adding a related appropriation to the D73 fund, that can be a change that can be made, because maybe we've had that situation where we'll set up a D73 and a D23 for an agency, and maybe they've requested linking cash, but it hasn't been approved yet. And we'll go back in later once that approval is received and add that related appropriation. And yes, the additional question in the chat, does this require to have a cash fund? Yes, if you're using this specific linking cash, linking allotment functionality, you must have a D73 cash fund, because this is where that relationship is set up in SFMA to tie that cash fund to the related appropriation. Now, you may notice on this screen, we have 2 rows at the bottom of the D73 cash fund profile to add an appropriation number and appropriation year. But if you go back and look at that D73 cash fund form Carlene was presenting earlier, we only have a spot for you to specify one appropriation. And that's because you can only link one appropriation. You can't tie multiple appropriations on a single D73 cash fund. That second line is there because we may need to add that same appropriation in a different AY. So it might be tied to both the 2013 and the 2015 appropriation for that year. So even though it looks like you can put two appropriations there, we can only tie a single appropriation to a cash fund. You can't have multiple appropriations on a single cash fund. So this is what it would look like on the D73 screen. So if you're not sure if your agency has this, you can go to the D73 screen, you can enter in your agency, push enter, and you can F5 next and just scroll through. If there's nothing populated in these related appropriation fields, you don't have any linking cache. It has to be set up like this for you to be able to use this functionality. Now, there is a second step of setup that needs to happen. We set up the D73 to create that relationship, but Savers, the budget group, also has to make a budget entry. When you request linking allotment, there's a form on Savers' website that you submit that Savers and DAS CFO will review, and they will approve a linked allotment amount. How much of the general fund can you borrow? And when you have been approved, Savers will go in and make an entry, and it will show up on that linked appropriation. So in this example, this is the general fund appropriation 89901. It will show up as a specific balance type, that BT, on the towards the bottom of the screen as balance type 24 linked allotment. So looking at this screen, I can see that Savers has made an entry to allow the agency to use up to $500,000 from the general fund to borrow this while waiting for federal reimbursement. So both the D73 screen and the 62 screen have to have this information for SFMA linked cash to work correctly. So this is the setup. The next three slides, I'm going to tell you a little bit more about how you can determine how much money you have available to spend from linked cash, because it's a little bit different than what you would normally be used to. So most of the time, if you're trying to see how much cash you have available to spend in a D73 cash fund, you would go to the 63 screen. You would input the agency and the cash fund, you'd hit enter, and you'd see how much money you have available. Now, for the example we're walking through with linked cash, if I pull that up, they actually have a negative cash balance, which under normal circumstances would not be allowed. Normally, if a transaction you're trying to post is going to cause that cash balance to go negative on the 63 screen, you will get an error of insufficient cash and you won't be able to post it. But because we have this linking cash functionality, it will allow the 63 screen to go negative. So right now we have a balance in this cash fund of negative $432,275.50. You would only see this if you have linked cash. Now, if you want to actually see how much you have available to spend in a linked cash fund, you want to use the 14 screen. And if your agency does not use linked cash currently, this may be a screen you're not at all familiar with. You may not need to use it then. But if you have a linked cash, linked allotment, this is the screen you want to go to see how much you have remaining to spend. So if we look at this screen, you input the agency number, you put the linked appropriation in there. So I put the general fund 89901 appropriation in there, the appropriation year I'm concerned with, and it'll pull up a couple of different screens information on here. So on the left-hand side of the screen towards the bottom, we have the appropriation balances section. So these are amounts directly from the 62 screen for that appropriation and that appropriation year. We can see if you looked at the balance types, we have that balance type 24 linked allotment of $500,000 that we saw in the previous slide. On the right-hand side of the screen are the cash control balances, and this is directly from the 63 screen. So you could compare this to the prior slide. It's all the same balance types that we saw on the 63 screen when we looked at the cash fund. And then it calculates the linking balance for you. So it's taking that negative amount from the prior slide, that negative $432,275.50 that we just saw. It's adding it to the 500,000 linked allotment, and we have an available linked balance to spend of $67,724.50. So we are using some of that. We are borrowing general fund because we don't have enough funds in the cash fund. We're still waiting for federal reimbursement. So a little bit more about the 14 screen. As I mentioned, you're going to be entering the linked appropriation in the AY on the 14 screen. You're not entering the D23 cash fund, which is a little bit different than what you would normally expect. You're entering that linked appropriation. The 14 screen is combining information from the 62 and 63 screen to calculate the linked balance available to spend. And the calculation is a little bit more complex than what we just went over on the last example. It's actually the lesser of two formulas. So the calculation is the lesser of the BT24 linking allotment balance from the 62 screen plus the D73 cash fund balance from the 63 screen. So in the prior slide, that's the calculation that was happening there. It was the $500,000 plus the negative amount from the 63 screen, and that's the amount you have available to spend. However, it could be, if these two formulas, the second one is lesser, you may see a different amount on the 14 screen. It may take, instead of the linked allotment, you've been approved for up to $500,000. It may take the remaining appropriation allotment on the 62 screen plus the available cash balance on the 63 screen. So you've been approved to borrow up to $500,000 in general fund, but you can't borrow more than you have in general fund remaining. So if you're looking at the 62 screen for that general fund and you only have $300,000 in allotment remaining, the 14 screen is going to pull that $300,000 instead of the full $500,000 because you can't spend more general fund than you have. So the system's taking the lesser of these two calculations to prevent overspending of general fund appropriation or allotment. And this can cause questions for agencies that use linked cash. Typically, agencies are more likely to run into issues of insufficient cash in a linked cash fund at the end of the biennium, because you can't borrow against that linked general fund appropriation if those general fund dollars have already been spent. So that's just something to be aware of. The calculation is actually the lesser of those two formulas. So last topic on linking cash before we're going to move to the next agenda item. There are a couple of specific error messages that are unique to linked cash that I wanted to cover. The first is the KIO error. This is a warning message that your remaining appropriation balance on the 62 screen is less than your balance type 24 approved linked allotment amount. So this would indicate that SFMA is now using that second calculation from the prior slide. It's just letting you know, hey, your general fund appropriation is running a little bit low. You can't borrow the full amount that you were approved. Since this is a warning message, you can still proceed with saving the transaction. It'll still let you post it. It's just giving you some information that your linking allotment is running a little low. The second group of errors is the F07 and F08. These errors indicate that you do not have enough linking available balance on the 14 screen to post the transaction. So the transaction you're trying to save is going to cause that linking balance to go negative, which is not allowed. It's going to be a fatal error message. You won't be able to save the transaction until you increase that balance on the 14 screen. If you don't use linked cash, you're not going to see these errors. These are only appearing when you have linked cash. Okay, any questions on linking cash?
We do have some questions. So
Great.
let's see. Oh, when is the link turned off?
Okay. So we have to have approval from Saber's CFO each appropriation year. So if you've been approved for linking cash in AY 2023, SFMS reaches out to check with Sabers and CFO if your agency is still approved for 2025. Some agencies, it just continues to roll forward. But if it's decided that it's no longer appropriate for your agency to have that linked cash, Sabers will not give us the go-ahead to set it up in the new AY, and we would remove it from the profile. If you determine your agency wants to change its structure and no longer wants to use linked cash, you can let us know too. We can inactivate those profiles if they're no longer needed. But we do have a process to make sure that Sabers and CFO are continuing their approval for each biennium.
No other questions at this point.
All right. Thank you, Jennifer. All right, so I'm going to move to the next topic we have, which is on gap funds and also GASB 54 indicators. So let's just start out with a little bit of a question to kind of illustrate how you can see the roll up in SFMA for financial reporting. Now, I've noticed agencies tend to be more focused on the D23 fund level when you're determining where to post your transactions, when you're reviewing fund balances. However, if you look at the Oregon Accounting Manual or maybe SARS training, it's more commonly referred to gap funds or gap fund types when talking about funds. So a question came up recently of how can you tell those roll-ups in SFMA to see how everything is rolling up in the system. So the question specifically is, how do I tell whether a D23 fund in SFMA is classified as governmental, proprietary, fiduciary, or the government-wide reporting fund? Because in the Oregon Accounting Manual, that's usually what it's referring to. There's a lot of information in the Oregon Accounting Manual that can help you figure that out. But you can also look in SFMA to actually see the roll-up. So if you have a setup where you have maybe a second monitor, if you want to pull up a D23 screen for your agency, you can kind of follow along because I'm going to talk about a couple different screens that you can look at to see the roll-up. So to start out, you pull up a D23 fund profile. And there's going to be a bunch of information on that D23 fund profile. You want to look at the gap fund specifically. That's what we're going to start. We're concerned about the financial reporting roll-up. So let's look at the gap fund. We can then look up that specific gap fund on the D24 profile. So if you navigate to the D24 profile, you enter in that gap fund, you'll get the gap fund title. And you'll also see a field on there called the gap fund type. On the D24 profile. If you take that gap fund type, you can look that up on the D21 screen. So you'll type that in on the D21 screen, and you'll find another field, the gap fund group. You can look up this gap fund group on the D20 profile. And the D20 profile is where it will tell you if it's governmental, proprietary, fiduciary, or the government-wide reporting fund. So if you're curious about a D23 fund, if you want to look at your existing structure, you can use those screens to look up the information. You can also skip right to the D20 profile if you want to. You don't have to go through all those steps. The gap fund group number is displayed at the bottom of each D23 fund profile. So if you pull up a D23, you'll see a field towards the bottom called the gap fund group. It's a 2-digit number. You can go ahead and go straight to the D20 screen and enter in that gap fund group and immediately see how it's classified. So the next question that we have is really related to continuing our conversation about gap funds and GASB 54 indicators. These are both elements on the D23 fund profile. We talked about them in our basic training. If you have questions on that, go back to the basic training. There's some good information there. Those two indicators together, the GASB 54 indicator or the gap fund, are going to determine where any nominal balances for that D23 fund will close at the end of the fiscal year. And I've gotten the question before, how do I identify which balances are considered nominal balances? It's the balances in GL accounts that are closed out at the end of every fiscal year. So, GL 3100, GL 3500, revenue, expenditures, your transfers in, your transfers out, those things that would close with the general ledger close. We did recently create a new reference list that we sent out through SFMS News. It's the general ledger list and roll-up. You can also use that to see a complete list of the nominal accounts. There's a link to that spreadsheet on this website. The final column, if you filter on that last column in the spreadsheet, you can see all of the real accounts, you can see all of the statistic memo accounts, you can see all the nominal accounts. So it will show you kind of that roll up for the D31 general ledger accounts. Now, we did touch a bit on this in the basic training, but just to kind of reiterate that comment, the GASB 54 indicator and gap fund on the D23 will determine which equity general ledger account that any nominal balances will close to at the end of the fiscal year. So how can you tell what equity general ledger account will be used by a D23 fund? The first thing you want to look is, does this D23 fund have a GASB 54 indicator? If so, it's the indicator, the GASB 54 indicator, that will determine the equity GL account. So you can go to the D54 screen, enter GB54 as the table ID, input that GASB 54 indicator, that 2-digit code, in the key 1 field, press enter, and then you'll be able to see that equity GL account. And we walked through this in the basic training with some screen prints showing that process. If there is no GASB 54 indicator, the gap fund is going to determine this. And if you want to see what equity account that gap fund would close to, you can go to the D24 screen, look up the gap fund, find the gap fund type, and on the D21 screen for that gap fund type, you will see the equity GL that activity would close to. I do see a comment from David. FYI, for finding if a general ledger account is nominal, you can check the year-end close indicator on the D31 screen. Yep, that is correct. You can go to the D31 screen. There's an indicator there that will tell you that same information. That spreadsheet that I referenced in the prior slide is pulling information from that table, so that is the source. Next up, we have the topic of changing gap fund and GASB 54 indicators. So as Carly mentioned earlier, there's only a few fields that you can change on an existing D23 fund. We also talked about that in the basic training. The gap fund and the GASB 54 indicator can be changed on an existing D23 fund. You have to have your SARS analyst approve that. SARS may request you to make this change as well. And we had a question at the end of the basic training that I wanted to go into a little bit more detail here. Of depending on the timing of when you're changing a gap fund and a GASB 54 indicator on an existing D23 fund, agencies might also need to work with their SARS analysts to reclass equity balances to the correct general ledger account. And there's two scenarios where a reclass entry may be needed. So the first is the more common one. If this is an existing D23 fund that's been in use for multiple fiscal years, we run the general ledger close program every year after the close of month 13. So if the D23 fund was used in prior fiscal years, just correcting the D23 fund profile gap fund or GASB 54 indicator now isn't going to go back and correct where nominal balances closed in the past. So you may need to do a reclass entry to move that fund balance into the correct equity account. There's specific T codes that are used for that. We may have to temporarily modify those T codes to allow you to make the reclass entry. So if you have that situation, work with your SARS analyst. SARS will reach out to us to make a temporary modification to the T codes if it's necessary to allow you to make that reclass entry. Now, the second scenario is a little less common, but it can occur. If a GAP fund or GASB 54 indicator is changed on a D23 fund and it changes what equity GL account the nominal balances will close to during the first year of a biennium, you may need to make a reclass in the second year of the biennium. Kind of weird timing there. The scenario is uncommon, but in the next section, we're going to talk about some of the SFMA system jobs, and it'll help explain why this can happen. So really, if you are making a change, it's the first year of the biennium, you may have to do a reclass entry in the second year of the biennium to make sure equity's in the right place. And again, this is pretty infrequent. I've only seen it a few times, but it's something that the SARS analysts may see when they're doing their pre-close review. Agencies may notice this. You may have balances in two different equity GL accounts for a D23 fund, and a reclass entry would be needed to correct that. Any questions on the GAP fund or the GASB 54 indicators before I start talking about SFMA system jobs?
I'm not seeing any.
Sounds good. I will move forward then. So we have some system jobs here. I wanted to talk about ones that specifically use the D23 fund profile. SFMA has a lot of jobs. It has a lot of behind the scenes programming. We are sending out notices about jobs that may impact you on the SFMS news list. We have resources on our website explaining some of those jobs. I'll include links to those in a later slide. But these ones are ones that really use information for the D23 fund. The first that we have is the fiscal year end rollover. So this runs after the nightly batch cycle on the last working day of June. It's going to populate the beginning balances for the new fiscal year. So in even numbered fiscal years, fiscal year account balances roll forward to the new fiscal year. In odd numbered years for the new biennium, AY balances are rolling forward to the new AY for 2 fiscal years. So this is that situation. If you make a change in the first year of a biennium, it may not carry forward to the second year of the biennium for that beginning fund balance. So that's that scenario. It's a little bit confusing when this occurs, but it can happen because of this fiscal year end rollover is trying to roll over balances for 2 fiscal years when we start a new biennium. So for any of the nominal GL accounts, this job is going to look at the D23 fund profile to determine the equity GL account that any nominal balances are going to close to, and includes those amounts in the beginning balance for that equity GL in the new fiscal year. So it's moving those balances forward, determining what those nominal balances are going to close to, and populating it in the equity balance. And that happens the last working day of June. The second system job is the general ledger close. We run this each fiscal year after month 13 close. This is going to be the final closeout of those nominal general ledger account balances to the appropriate equity accounts for the close of the fiscal year. And again, the DAFM 351 is taking a look at how the D23 is set up at that moment when determining where those equity balances are going to close to. So if you notice, we have the fiscal year end rollover occurring the last day of June. It's populating those beginning balances for the new fiscal year. And then we're not actually running the close until August. So there is some behind the scenes programming in SFMA that looks at the D23 profile anytime transactions are posted after the last working day of June, but use an effective date from the prior fiscal year, so that those July beginning balances are getting updated correctly. to reflect any additional transactions that are posted after the last working day of June. So both of those programs are referring to the D23 fund profile to see where that activity needs to close to. A couple of other jobs I want to mention that use the D23 fund are jobs that will create new profiles for future periods and will archive any old profiles from the system. So the profile role, we ran that this year. It's run in odd numbered years before the start of a new biennium. It rolls any existing appropriation year and fiscal year profiles in SFMA to create those same profiles in the new appropriation year and 2 new fiscal years. So D23 funds are included in that profile role. So if they are active status, they don't have effective end dates, they will be rolled forward to those future periods. We also have the profile archive. It's run in even numbered years to remove older appropriation year and fiscal year profiles from the system. So if you pull up a D23 that may have been in existence for years and years and years in your agency, it'll only go back so far. You can't pull up a fiscal year 07 profile because we're archiving those off to keep our system running clean and not take up as much space for some of that older profile information. So that's kind of happening behind the scenes, that profile archive, to remove anything that meets the criteria. It's got to be past a certain fiscal year or appropriation year. Certain profiles, if it's inactive and has an effective end date, it would also be included in that archive. When we run that, we send out more information on that criteria to the SFMS news list. Okay. So this was kind of an overview of these system jobs. I didn't go into the full detail of the programs, how they run, what you need to look for. We do have a lot of great information on these in our SFMS desk manual. So you can see links here to more information about that fiscal year end rollover, about the general ledger close, and about the profile role. We don't have information in the desk manual about the profile archive because it's a pretty straightforward program. But if you have questions on these SFMA system jobs or any of our other SFMA system jobs, reach out to your analyst. Your SFMS analyst can help answer those questions for you. But there's a lot more information in this desk manual if you're curious about these specific jobs. What I want you to take away from today is that they are looking at the D23 fund profile specifically for the fiscal year end rollover and the general ledger close. They're looking at that gap fund and the GASB 54 indicator. So that's why it's very important that those fields are correct. Any questions on our system jobs? All right,
I'm not seeing any.
Thanks, Jennifer. I'm not seeing any either. So I'm going to turn it back over to Carlene to talk a little bit more about closing out profiles.
Hi. What is, oh, camera. Okay.
We just got a question.
Oh, well then let's go back and I'll stop sharing. I'm not stop sharing. I will let Liz take the control back.
Oh.
So Liz, the question is why is it that the D23s related to bond funds are not archived?
Yes, because we do not inactivate those funds. And Carlene, I don't know if you talked a little bit about that one in the basic training. Anything that has an appropriation fund that ends in 020, we cannot close those funds out. They're needed for financial archive. Those are capital construction appropriations that need to stay open longer for accurate reporting. So those aren't going to be archived because they're going to stay active in the system. Carlene, did you have anything more to add on that?
No, I did talk about it in the basic training that appropriated funds, and I even went on to identify them as 30-20, 60-20, 80-20, are not eligible to be inactivated or archived. Has to do with how the financial archive works And apparently, long before Liz and I ever came, the first year I think they archived it, they actually did close out those funds, and it caused a great deal of issues with that. A lot of them are protected. So we do a lot of testing and a lot of protecting, and yes, those are not eligible to be inactivated. However, a lot of them are. So let's talk about closing centrally maintained profiles. And in this case, centrally maintained profiles are the profiles that we have talked about either in the basic training or in this advanced training of the D23, D73, and D53 profiles. Of course, the D23 fund is your basic fund. D73 is your cash fund, and the D53 profiles are your treasury funds. Currently, there is no form in place to close centrally maintained profiles. This is something that has been talked about for quite some time, and we have not gotten there yet. We're still in talks about whether we want to have a form or keep it the informal request going, which is an email. We are changing where you need to send your email. Previously, it has been sent to my email directly with a CC to Liz. Fabiola would like to change that to send all D23 requests or closing D23 requests through the D23 SFMS email box. So you'll be seeing that change on this. That is a change from when we had basic training when we were directing you to send it directly to me. So centrally maintained profiles that have as I said earlier, are the D23 Fund Basic Fund, D73 Cash Fund, and D53 Treasury Fund. These are, for the most part, the one that is 100% allowed to be closed at this time is a D53 fund profile. That's the Treasury Fund. If you're down to zero, we want to close it out as soon as possible at Treasury so that you don't. Do you have to set up? Yes. Quick answer on that is I saw the question that popped up. Jen, do you want to read that to me?
Yeah. Do you have to set up a new D23 for each bond fund?
For each bond treasury fund, yes. Because there's no way to access that treasury fund if you do not have a D23 associated with it. It's a one-to-one on that. So if the CFO office opens a treasury fund for you, then we need at least, at the minimum, one D23 fund to interact with that treasury fund. If not, anything that comes across on a 13 account, or if you need to make payment on it, you can't access the funds in Treasury. Does that make sense? Okay.
Yes.
Okay. But what has been opened at Treasury can be closed at Treasury. It is the one centrally maintained profile that can be closed by SFMS is Treasury Fund, as Liz was talking about earlier. The D23 fund, if it's associated with capital construction, we talked about this earlier in basic training, those cannot be closed in the system. And as a result, any D73 fund that is associated with those D23 funds, capital construction funds, they will not allow me to close the cash fund. Our stars prevents that. Our process for closing a Treasury account, you send the email in and requesting closing, and we run a query on all associated D23 funds. to assure that the request will be successful, that there are no balances on a D23 that is unanticipated by the agency. That has happened. So we need all zero balances in real accounts, with equity being the exception. Zero balances also in the 1011 and 111 GL account, because these balances would indicate an outstanding warrant. If you do have an outstanding warrant and it is in place for 2 years, you cannot close out that D23 fund or request or be successful in closing it out until the expired warrant process has run in July, and that's after 2 years that it's been outstanding. SFMS will then, once everything is zero, it's verified that it is eligible to be closed and is proper. We will email to the Treasury requesting closure of the account, and we will include all email addresses on the original email request, so you should see it flowing through if you've requested it. And then we will email, once we've received an email confirming the closing process is complete, we will proceed to close the profiles as appropriate in our stars. So SFMS process for closing just a D23 fund should be requested if closing a if there's only one Treasury account and one D23 account, and it's not, and as long as it's not a capital construction account and it's appropriate, if closing a Treasury account, we can close those out if you tell us to, if you inform us to. If you do not include the words of please close the appropriate D23 funds and D73 funds, we will close the Treasury account and not close the D23 account, or you'll get a kickback email from me saying, hey, do you want me to close the D23 accounts? There's no reason to have them open if you're closing the Treasury accounts, and they're eligible to be closed. We can also request just D23 fund closure, even if the Treasury account is not being closed, especially if there are multiple D23s that exist against it. If you are no longer using a D23 and the agency has deemed it appropriate to close, please, by all means, keep things tidy. This is a reason to close your D23 funds, even if you're not closing a Treasury fund. There again, I will be running a query against the requested D23 fund to assure that the identified are all balances are zero, the real funds, and the looking for outstanding warrants. And the appropriated fund is other than 30/20, 60/20, and 80/20, which are all capital construction appropriated funds. And there again, we proceed to close the profile in our stars. Now there are special circumstances when you're closing out a D23 general fund D23 profile. SFMS, we process these all the time, closing general fund D23s. There again, we always start with doing our due diligence, which is running a query against the requested D23 fund closure to assure that all the identified real balances are zero. If there is a positive balance and that exists in the GL0070 or cash, balance on the general fund D23, the agency will need to transfer those funds to agency 999 or SFMS to a zero balance. We ask that you use T code 720. Oh, and that should say 721. And please contact your SFMS analyst or myself for the coding instructions, because there are specific coding instructions for each side of the T codes. Negative balances can also exist on general fund D23s. And if you're requesting these to be closed and I see a negative balance, then on the flip side, agency 999 or SFMS will need to transfer the funds to the agency against that specific D23 fund account to bring the fund balances up to zero. There again, looking at GL accounts 1011 and 1111, if there is a balance in there, that would also indicate an outstanding warrant, and that would preclude me from closing the account and or transferring funds at that time. Process of closing a D73, we can close only if the associated D23 funds are being closed as well. If those D23 funds are ineligible to be closed, the system itself will preclude me or disallow me from closing the D73. And these are profiles primarily that are associated with the appropriated fund for capital constructions. If all things are a go, however, we can proceed to close our stars if the D73 fund is eligible. Everything is interconnected, so if I can't close one, I cannot close the other. However, what is closed doesn't always remain closed. Occasionally, there's a need to do either entries later on at the end of the fiscal year after centrally maintained profiles have been closed. This has happened, or all of a sudden a program will be refunded or continued on by the legislation. It's kind of a shock. You might have thought it was a closed program. And we can reopen those things. We can reopen the Treasury Fund, we can reopen the D23 Fund, and we can open up the D73 Fund if appropriate. So what is closed doesn't always remain closed. So it's not a permanent action. The agency may need to reopen these previously closed profiles, and profiles can be reactivated. All we need is an email request, and please, again, send those to the D23 email box, requesting what profiles need to be reactivated for the agency, be it the Treasury Fund, D23 Fund, or the D73 Fund, if appropriate. The Treasury Fund will need to be reopened at Treasury as well, so that's just a quick email, and generally speaking, that's just a 24-hour process. Do you have any questions regarding the closing of profiles? What is appropriate to close and what is not appropriate to close, and what we are looking for? Okay, we're pretty close to 11 o'clock, Liz. Do you want to ask for, if a fund isn't used in a couple of years, should it be closed? Let me answer that one really quick. If it hasn't been used for a couple of years and you don't see that the agency is going to, that there's no future purpose for it, and if the cash balances on it is zero, or if it's a general fund D23, I would say that is an agency, through agency analysis and agency decision to close that. It would probably be appropriate, but there again, it is not for my position to say, yes, it has to be closed. It really is up to the agency whether those D23 funds that aren't being used are closed. If you're not using it, it probably is best, but there again, it's an agency decision after agency analysis. Would you agree with that statement, Liz?
Yep, I would.
Okay.
All right. So that does bring us to the end of our slides. We aren't quite at 11, so we still have plenty of time. If you have questions, please let us know. Even on topics we didn't cover, if there was something any D23 questions you have, we're happy to take some time to answer those for you. So I did see a question in the chat. Sorry, Jennifer. What is the purpose of having multiple D23 funds pointing to one D73? And Carlene, I'll go ahead and respond to that, and then please jump in if there's anything that I've missed. So a D73 cash fund is how you're controlling cash on the 63 screen. So let's say you have a D23 fund and multiple D23 funds, and they all use the same treasury fund. If you don't have a cash fund on that D23, on the 63 screen, it's going to be tracking cash at the D23 fund level. So you would put in your agency, your D23, and if you don't have enough cash in that specific D23 fund, even if you have enough cash at treasury in that account, you're going to get an error when you try to post a transaction in SFMA. Now, if you have multiple D23 funds with the same treasury account and you decide to put a D73 cash fund, the same D73 cash fund on all those D23 funds, SFMA is going to control cash at the D73 cash fund level, that higher level. So you go on the 63 screen, you enter in the cash fund, you'll see your total balance available in that cash fund. So maybe one D23 doesn't have enough cash, but other D23s in that same cash fund do, you still will be able to post a transaction. So it gives you a little bit more cash management flexibility if you want to do that. Some agencies, maybe you don't want that. Maybe you want to control it at the D23 fund level, then just don't put a cash fund on it and we'll track it at the D23 fund level.
Perfect. Are there any topics that we did not cover today that you want more information on? This would now be the time to ask us. Oh, you have questions because I get them all the time.
And while we're waiting, you know, we just got a question. Can you filter by both the D73 and the D23 on the 63 screen? Or can the 63 screen only use the D73? So the 63 screen, if you have a cash fund, you're only going to be able to see the total cash fund balance. It's one or the other. You enter the cash fund if that D23 fund has a cash fund. If there's no cash fund, you'll enter the D23 fund. There is some additional breakdowns depending on how you set up your grant profile. So you have the ability to track cash by grant, but you can't filter by both the D73 and the D23.
The only way I've seen it, Liz, is I believe it was Sangeet from Department of State Lands showed me a really sweet little query he had developed, pulling in the D73 and then showing the funds underneath it with their balances. So that was really, really, yeah, it was, I believe. But it was a really sweet looking little query. So if they do want to see it by 73 and D23, that would be the way they would need to do it.
Yeah, good comment, Carlene. Just for everyone's refresher, OB1, it only refreshes once a week. So it's not going to be real-time data if you do that, but then you can at least see all the D23 funds that are flowing into that D73 cash fund and see the differences there. So if you've got additional questions, feel free to put them in. We'll stay on for another, I'll say, 10 to 15 minutes or longer if we've got more questions. I don't think we're going to take a break because I think we're going to be able to wrap up a little bit early here. But I really hope you found this training useful. Carlene and I are happy to answer additional questions as they come up. Specifically, if you've got questions on a specific D23 fund or you're trying to kind of figure out the legislation, we can help you answer those questions. Sometimes we see some unique things. I know Carlene has helped some agencies with some specific questions. So we can't necessarily cover everything you might see here, but we're really hoping that the basic training and this advanced training give you a lot more comfort with D23 funds. We're going to have these materials available on our website. We'll probably be repeating these trainings in the future. So if you've got ideas of additional topics you want us to cover, or other areas, just anything in general you'd like to see SFMS do trainings on, please reach out to Fabiola, and she can kind of prioritize our trainings and see if there's other topics that state agencies would like us to cover. So I do see a question, Carlene. What legislation is needed to set up a D23 for federal funds?
Well, it would be either a House bill or a Senate bill. Even if you receive or e-board minutes, even if these are federal funds that are being granted, you still need permission by the legislature to spend it. The only exception that I've run across recently was the pandemic, and we use the actual HR, which is the House resolution bills for the ARPA funds and the COVID-19 funds that the state received. That is probably the only exception. Other than that, because frankly speaking, the state legislature hadn't had time to address it, and the funds were coming in so quickly and things were moving so fast. Other than that, the federal funds should always be addressed by the legislature for spending.
So clarification, so you're looking for the budget bill typically?
I'm looking for the budget bills.
And we did cover this a little bit in the first basic training. If you go to the 20 appropriation profile, it will often have a citation there for the House bill or Senate bill that authorized the expenditure authority for that appropriation. So take a look at those slides. That's one way to find it. It's not always there though.
It's not always there. And it's not always, I've seen a number of the agencies that use the same appropriation, but the legal legislation is different. So it has a place for one piece of legislation, not necessarily all the legislation for spending. So just be aware of that. But it is closely tied, and a lot of times, especially on the new bienniums, they're pretty close to what is being requested. I know, I look at them. Okay, the other thing I wanted to add, if you have any comments regarding the presentations, and if you think that there are any particular subjects that we really need to do a deeper dive than we've already done, please let us know so that we can look at those and say, okay, what are we really needing to add value for our agencies? Because we want it to work for you, not just for us, but for you as well. Grant accounting.
A topic for grant. That's a good suggestion. I will definitely
pass
that one forward. Yeah. There is information in the Oregon Accounting Manual, a lot of information is SARS related for the CFA reporting, but yeah, we're happy to see what topics are out there, and we might need to collaborate with another group on training as well.
That would be an interesting topic. I would be interested in that one.
Yeah, and then there are some specific things about setting up the grant profiles too. I mentioned you can track cash on the 63 screen by grant. We have some agencies that have chosen to do that. So I think there is some good topics we could cover from an SFMA perspective with that. Again, thank you everybody for joining us. We're happy to give you some time back in your day. We will hang on. I'm going to say, Carlene, let's hang on for another 5 minutes. And then, yeah. Jennifer, if we don't have any questions after that 5 minutes, you can go ahead and end the recording.
Okay, great.
Thanks, Devin. Should we stop recording?
I haven't yet. I figured I'd give it just a,
wait a minute. Do you set up Treasury? A question. Do I set up Treasury?
So, Carlene, you want to explain the difference between the receipted Treasury accounts and the suspense accounts and who sets each one up?
Okay. Do you set up Treasury, or is that set up by the agency? Okay. I set up what we call receipted accounts, or Treasury calls them agency accounts. Those are legislatively given Treasury accounts. They're the ones where it's in a bill. It's saying it's separate and distinct from the general fund. It will, generally speaking, it will name the Treasury fund. It may or may not address the interest, where the interest is to be placed. Those are the ones that I set up directly, that those come to me specifically. A suspense account is, like I said, is something that is either outside of the Treasury, but if it's within Treasury, the agency themselves work with Treasury. So suspense accounts, the agency works with it. They are not associated with the verbiage separate and distinct from the general fund, and are I believe the 8,000 accounts can show up on the 13 screen, but they may not. Anyway, but the receipted accounts will always show up on the 13 screen. So those Treasury funds.
Yeah,
that make sense?
I want to add. We'll see if Mona has more questions. The one thing I wanted to add is it always starts with a request from the agency. So if it's a receipted account, typical what we see shows up on the 13 screen, you've got that language separate and distinct. You would send an email to Carlene. Carlene will set it up with Treasury on the agency's behalf. If it's a suspense account, there's a certain request that you would have to go through Treasury. Those do not come through our group because we don't have cash and budget controls in the system. If you go to the Oregon State Treasury site, they have their cash management manual. And I do see a follow-up question. Do you let us know when you add one? We only add them at an agency request. So yes, we would be letting you know that. We are not setting them for you without an agency request. So we're not going through the legislation and determining what accounts need to be set up for Treasury. The agency is doing that, and then you're sending us a request, and that's our indicator that we need to set something up with Treasury.
We do keep you in the loop as far as if you send me the email and you put 3 other people on the CC line to let your boss or their bosses know, or the budget team know that that it's being requested. We do keep that intact and forward that to Treasury. I'll rename it So you'll get at that time, you'll see what number has been assigned to it, so that you can move forward to start requesting your D23 and D73 fund if appropriate. And you'll also see it come back from Treasury when it's set up from Treasury. You'll need to wait 24 hours once the Treasury email has come through, because it needs to crosswalk from Treasury to our stars, and then we can add it into our stars, add the profiles necessary for setup in our stars. So at that point, I let Jeremy be the one to let you know that it's being set up, and then you just look at it 24 hours later and it should be available. But you can't access it until the D23 is requested. That's associated with that the Treasury fund, and it takes a minimum anywhere from 3 to 5 days, unless there are issues, to get a D23 set up for all the approvals.
We did get a question, the difference between a suspense account and a Treasury account. So there are, in the OST cash management manual, there's descriptions of those different types. Most of the time when we are talking, we call them receipted accounts. I believe Treasury will refer to them as agency accounts. Those are typically what agencies have. Those are the ones that you would request through us, and we would set them up for you. It's a bank account at Treasury. You'll have a bank statement for it. Those will, when you record deposits at Treasury, they'll show up on the 13 screen to be reconciled. You'll have your cash controlled in SFMA. Suspense accounts are a specific type of Treasury account. They call these TRS accounts in the OST cash management manual. Those you set up directly through Treasury. Most of the time, they do not allow check writing authority unless you get special approval. Those are the ones that do not have cash and budget controls. So agencies may need that if they have a subsystem, if they have specific programs where they think a suspense account is going to be more useful. Usually we direct agencies towards the regular receipted account because you have those controls. If it's budgeted activity, it'll show up on the 62 screen. But there are those suspense accounts that we do have some agencies use. It's still an account at Treasury. It just doesn't have the same controls in SFMA. So you'll still have a bank statement for it. You'll have to do cash reconciliations for it, and you'll have to make entries in the accounting system to make sure the cash balance reported for those suspense accounts matches what's reported at the bank. So I would recommend, Mona, if you've got additional questions, the cash management manual has a lot of information on the differences between those types of accounts. If you have questions on how they're handled differently in SFMA with those cash and budget controls, reach out to myself or your SFMS analyst. We can give you more information. All right, I think we've had most of our attendees leave. I'm not seeing any other questions come in the chat. Of course, if you have questions along the way, feel free to reach out. We're always happy to answer them, and we hope you have a great rest of your day. Jennifer, if you could go ahead and end the recording.
Yep. Done.